Buying your building versus leasing it. And which commercial real estate strategy is the right one for your business? And one of the biggest financial decisions a business owner will ever make is really whether to buy a commercial building they are renting or to continue leasing it. And while leasing offers flexibility and lower upfront costs, purchasing commercial real estate can create long term wealth and stabilize your occupancy costs and also provide valuable tax advantages. So the right decision really depends on your business goals and your available capital and your growth plans and financing options. So let's examine both approaches so you can make an informed decision. Why many businesses continue to lease? Well, leasing remains the best option for many companies because it provides a little flexibility. And the benefits there are it's typically a lower upfront cash requirement. Not always the case, though. And it's easier to relocate if your business needs change. And there's less responsibility for any major building repairs. And your ability to lease larger spaces than an ownership might allow you to. And leasing works particularly well for, say, a startup or a business that's expecting rapid growth, or companies that are uncertain about their long term location needs, or just businesses wanting to preserve capital for expansion. Now, however, leasing also has disadvantages. And the main one is that every rent payment builds equity for your landlord and not for yourself. And lease renewals often bring rent increases and CAM charge changes and less negotiating leverage. So, why buying your commercial building can create long term wealth? Well, owning commercial real estate changes your monthly payment from an expense into an investment. So instead of building someone else's wealth, you're building your own. And some of the benefits could include you're building equity with each single payment, and a portion of each payment reduces your principal. And while your property is also appreciating, it's also increasing your net worth. But stable occupancy cost is the big one, and commercial leases often increase every few years, whereas fixed rate financing can keep occupancy costs predictable for a decade. Tax advantages. And business owners may benefit from depreciation and mortgage interest deductions and property tax deductions and potential capital gains planning. And as a reminder, you always need to consult your CPA regarding your specific situation. So it gives you complete control of the building, and your owner, as you as the owner, can make your final call on any renovations or your signage or your parking or any property improvements or any future expansion. You no longer need landlord approval. But also additional income opportunities. If you're buying a building that's larger than your business needs, you can lease excess space to other tenants. And rental income may offset a portion of your actual mortgage payment, making it cheaper for you. So, some questions to ask before buying. Well, buying isn't always the best decision, so you need to ask yourself, do I think my business is stable? And lenders typically want to see consistent profitability. And will you stay in this location? Well, ownership works best if you expect to remain, say, 5 years or longer. Can you comfortably make a down payment? And depending on the financing, owner-occupied commercial loans may require as little as 10% down when you apply through the SBA programs. And conventional financing may require a little more, but do I have enough to make that down payment is the question. And will ownership improve your cash flow? Well, sometimes mortgage payments are surprisingly close to whatever your current lease payment is. And when this happens, ownership becomes much more attractive. So what are your financing options? Well, commercial buyers have really several financing choices available to them. You have your traditional conventional commercial loans, and these are really ideal for established businesses who are purchasing owner-occupied properties. There's also the SBA 7A, And that's an excellent program, really designed for small businesses and professional offices and medical practices and dental practices and retail, but also industrial users. And this often offers low down payments and long amortizations with competitive interest rates. But the SBA also has the 504 product, and this is really perfect for purchasing larger or constructing larger owner occupied commercial buildings. And the benefits there include you have a long term fixed financing on the bank portion with lower equity requirements. And it's really great for manufacturers and office users and industrial properties. So let's talk about when leasing makes more sense. And buying isn't always the right answer, and leasing may still be preferable. Say if your business is growing rapidly, or if you anticipate the need to relocate coming down the road soon, or if you need specialized space only temporarily, or if capital is better invested back into the business, or if market conditions favor tenants. So let's talk about the hidden cost of waiting. And many business owners can spend decades paying rent. And imagine paying $15,000 per month for 15 years. Well, that's over $2.7 million in lease payments without ever owning the actual asset. Meanwhile, an owner may have accumulated significant equity through loan amortization as well as the appreciation of the building that you're in. So, how CommLoan helps business owners? Well, finding the right lender is often the hardest part of the process. And at CommLoan, we leverage our nationwide network of more than 700 lenders and our proprietary Cupid technology to identify financing options based on the property type and business financials and occupancy and loan amount and down payment amount and your borrower goals, or our borrower goals. So rather than relying on a single bank, borrowers gain access to a competitive lending marketplace that's really designed to improve financing outcomes for you. So final thoughts for the day is really there's no one size fits all answer. And for some businesses, leasing will provide valuable flexibility. And for others, purchasing commercial real estate becomes one of the best investments they ever make. And understanding your financing options before signing another lease could save you hundreds of thousands of dollars over the life of your business. Doesn't that sound nice? And if you're wondering whether buying or leasing makes more financial sense, let's have a conversation and run the numbers together. And sometimes ownership costs far less than most business owners expect. And I'm glad to have a conversation with you. Thank you for watching. You can visit my website, billrapp.comloan.com. You can start a pricing quote as well as schedule consultations. That way we can have a chat. Take care. Have a good day.